Hello, this is ICR Tiger from thetradingtigers.com. Today, 10th of June 2014, we're going to be looking at the pound dollar from the monthly down to the hour chart. And once again, we're using the Elliott Wave analysis. Before we start, please go through the disclaimer, stop, read at your own leisure, as well as the hypothetical performance. So, let's go to the chart. So here we are is the pound dollar. Let me put it on to you for the monthly chart so you can actually have a look what's going on. This series of lines is called the Tiger Ultimate, and this is a series of lines which helps us to determine which part of the wave count we're on, and just helps us to make our wave counts more accurate and correct. Below that we have an awesome oscillator to help us for divergence, as well further down that we have slow stochastics at 15, 5 and 5. Just helps us determine where we are in overbought or oversold territories. Okay, so I start the wave count from the high of 31st of October 2007, the larger wave degree being the degree cycle, and that's black and in Roman numbers. Wave 1 completing December the 21st, 2008, and Wave 2 retraced up to the 50% and completed 27th of July 2009. And subsequently then we're on a Wave 3 down. That's right, on a Wave 3 down. As you notice, this level is the ultimate level, really where we're looking for. In terms of price pushing up any further than that will invalidate our wave count, and therefore this wave 2 of the degree cycle will actually be moved across, and therefore that all this will be nullified as an ABC correction. Okay, fine, that hasn't happened yet, but just to let you know on that, continue with the wave count. We're in a wave 3 of a cycle degree. Its subwaves are the primary, which is red and in circles. There's one, and wave 2 is up there. When we break that down further, we have the intermediate. I'll now go to the daily chart. Daily chart will be able to show to you that right now we're in a wave 1 of a intermediate, which is green and in brackets. We break that wave structure down, which hasn't yet been completed. We haven't marked it as a completion. Now what we need to do is look at its subwaves. That's of the intermediate. When we take the intermediate, the first one is the minor, which is pink. We haven't completed its wave 1. We break that down. We come into the minute, which is blue and in circles. Wave 1 completed down here on the 15th of May. Wave 2 at the high here of 21st of May. And subsequently we're in a wave 3 of a minute degree, which is quite, we've projected its wave 3 to end at normal level at 66,602. So if it finishes there, that'll be wonderful. Its subwaves is the waves that we're right now in very minute detail looking at. Just to let you know, we've actually gone into 3 trades right now, and that's riding the minute wave 3 degree. All 3 trades are in profit. All three trades were taken at 67.49. That's right, 67.49. We have put another entry further up. Further down. That we'll discuss shortly. Our stop level is up at the close to the invalidation level, which is fair play to that, at 1.70287, and that's a healthy chunky stop, but it keeps us safe away from 210 pips, which isn't too bad for 3 trades on the daily. So that's pretty cool. Right now the trades are all in profit at 54 pips. Yeah, all 3 at 54 pips, which is good for us. And what we're doing now, we're riding the wave down, and we put our profit targets to hit at 3 levels. The first level will be the 78.6 level of its subwave, that is the minute degree, that's black and in brackets, Roman numbers, at 78.6, to take it at the 66.54, and 66.09 would be the second target. Then we're going to come back up, look to get an entry, and then come down and complete the last wave to complete at 64.49. Let's go to the 1 hour chart, have a look at this a little bit better. Okay, so we're now on the 1 hour chart, and you can see how much big difference that makes to us. Hopefully it's helping. That's what our aim is to do, is to help to look at things and not overcomplicate the issue. So here we go, we can see exactly how that trades are panning out. So what we're considering to do, we're considering to take a trade at the 23.6 level, which will be here, right? We'll take a trade there and put our stop loss just around that level, and therefore take the trade down of the wave 4 to complete the wave 5. So what we're going to do, we're going to take a trade at this particular level of the wave 4 at 1.66642 with a stop level at 1.6705 to complete at the final leg at 64.95, and that trade is going to be our stop loss is 40 points, and our reward is 166. Sorry, 166. So that's a 1 to 4 risk reward trade, riding the wave 4, riding the wave 5 all the way down to complete the higher wave degree 3 of, which is the minute degree. That's therefore this wave 5 will complete and hit this wave 3 and end it there. I'm putting quite a nice, a tasty kind of lot size on that, just to emphasize. Let's just close this one out with the confidence level there. My point being is that if it closed at the 100%, that's not viable. It's not possible it's going to close at the 100%, because the 100% level for the wave 3, its subordinate, is down here at 66.09. So feel pretty confident that it's going to come down there. But if we see exhaustion levels come at to 138 or 127, then we can close it out accordingly. Just looking deeper into this trade, right, going back to the 4 hour chart now, and just want to, it gives a more of a deeper picture and an overall picture for what we're looking at. So 1 second, let's just move these trades up there. That's probably right, exactly where we took the entry. So we took the entry for those 1, 2, 3 trades at 68.01, and like I mentioned previously, we're all in profit for them, about 50 to 53 pips. And basically what's come down of this, price has come down, made the 1, gone back up, hit the ratio necessary to validate that, and let's just put that up so we can see. That came up to in between 61.8 level and started to come down to complete its wave 3, and that's going to be quite a nice tasty thing. Please note our tiger filter lines. As you can see, prices hit the top band, hit the second band, bounce back off it, and now what we want to do, we want to actually see price come through down here. This stop level is for the future trade, for this particular trade of the wave 5, so don't have to worry too much on that. Just put it in there so you can actually follow the trade next that we're going to be looking at. And what we're going to do, what we're going to expect price to come down, take out this level 78.6 and then the 100%, and then okay, fine, two of our trades are in the money, right? We can then consider for the next point. Once it comes down to this level, of course, then of course we're expecting price to come back up there and take us out. So that's what we're looking for. We've actually put 2 trades in there right now for price to come down. In fact, when price comes down and goes back up, it's going to kick us into the trade, and therefore we're going to have to watch those levels. Yeah, so don't necessarily to put those trades in there, otherwise we will be out of a losing trade if and when price does come down and push it up. We want to get our wave 4, not a incompletion of a wave 3, if you get what I'm trying to say. Okay, fine. So that's it. So I'm ICR Tiger from thetradingtigers.com. Thank you.